everybody. How are you doing today, tonight, whenever you are watching? Thank you for being here. Welcome to the Kingdom Builders Credit Repair TV show and podcast. We are so excited for you to be here today, and we are going to be jumping into some things that you really want to know about, you really want to hear about as it relates to student loans. But before we get into the student loan topic, let's talk about what we are here to present. Every single Friday from 12:30 to 1, we are here to give you credit and financial tips with myself, Michelle Green, aka KB.MichelleGreen. The KB stands for Kingdom Builders. So if you don't know by now, listen, go and follow us everywhere at KB.MichelleGreen and Kingdom Builders Credit Repair. That's right. We are here to provide you credit and financial tips every single week. And what we do is we teach you, educate you on credit and finances. So we are going to talk about today, before we get into this actual topic of student loans, we're going to talk about what credit is, as we do every single week. But because we have so much to discuss today, we are actually going to just make it real quick on the credit itself. So when we think about credit, what we want to understand about credit is the opportunity for you to extend the amount of money that you don't have today, that you can actually borrow from a financial institution or someone that is lending you money. Now, normally as we grow up in our families, we tend to borrow money from family members and friends, or even neighbors, people in our community, right? But sometimes we get into situations where we can't necessarily pay them back, and we need to extend a line of credit to an actual creditor or lender. And that may not be your situation at all. Maybe you've never borrowed money from family members or friends, but what we do want to understand about credit is that credit is your ability to be able to borrow money that is lent to you for a temporary period of time or a long-term period of time for you to pay back over time in installments. And when we think about credit, we always want to understand that everybody is going to need credit at some point in time in their life. So no matter if you are just starting out, you're 18 years old, you're graduating from high school, going into college, there are things that you're going to need because you don't have enough money right now today in order to pay for those things that you want or the things that you need. So preferably we would take care of our necessities first, the things that we need, and then the things that we want. But as it relates to credit, we always want to understand what credit is and the reason why it's up there with oxygen. That's right, it's up there with the air that we breathe. So we got to make sure that we are always keeping our credit good. We're cleaning our credit, we're repairing our credit, we're restoring our credit, we're making the credit be what it's supposed to be. And as it relates to credit, you want a credit score that ranges between, I would say, a 650 to about an 850. So you definitely want to stay above 650, and you want to be as high as 850 on a MyFICO credit score. Those are the ranges that you want to always be in with your credit, because this is the range that gives you the ability to be able to buy homes, to be able to buy vehicles, to be able to buy, credit cards. You can do pretty much anything, high personal loans. You can do any type of department store card. All of those things are accessible to you when you have a credit score of 650 or higher. That's right. We want it at 650 or higher to 850 at our maximum. So that's what credit is. Whenever we don't have the money, we have the ability to have a line of credit from a financial institution of some sort, a lender, a company that is willing to give us a accessible line of credit. So we need those things as we go throughout our life, no matter if we are 18 years old or we're 100 years old like my grandmother. So when it comes to us in understanding today's topic, it is crucial for us to understand that it's not just about us being able to gain credit, it is about us being able to maintain our payments of what we have borrowed and being able to pay it back. And when I say that, I'm referring to the student loan debt. Now, everybody wants to be educated. We have information that we pay for. We have understanding that we pay for. And we also have application that we pay for. But as it relates to a student loan, we are gathering data. We're gathering information. We are understanding the information when we decide to take a class, going to school to get a certification or a degree or a license. Those are all reasons why we would go to school to get some sort of an education, some information, some understanding, or the application of a skill, gift, or talent. So when it relates to student loans, anybody has the ability, if their credit is in a certain type of condition, to be able to go to school. But the reason why today's message is so crucial is because student loans are changing. The laws around student loans have changed effective today, effective immediately, okay? So we want to understand what are those changes. And today I'm going to do something a little bit different. Instead of me just talking to you, I want you to see for yourself. So we're going to do a visual today so that you can see for yourself what is actually happening in the student loan arena. So for today, we are looking at the new laws and policy changes with student loans starting in 2026. Number one, your repayment plans are being completely restructured. What that means is that the previous plans that we had in place starting on July the 1st of 2026, we are now going to do away with the SAVE plan, which is a system where we were able to set up income-based repayment options. So your income-based repayment options were in place so that you could adjust your student loan monthly payment to a point where if you didn't make that much money, you would be able to reduce the monthly payment that is required for your student loan education to be paid back in little tiny and sometimes even zero payments. That means that this plan has already shut down and we are no longer able to access the SAVE plan. So the income-based repayment plans, if you're already on a plan and you're receiving an income-based repayment plan, it will phase out eventually. And also the pay plan, PAYE plan, and the income-based, basically all of these are ending no later than 2028. These are all plans that were previously in place since the pandemic and even prior to that, where we had the ability to be able, based on our income, to pay a much lesser amount, usually between about 1 to 5% of whatever we made for the year. But now we are no longer able to do the SAVE plan, the pay plan, the ICR plan. All of these are being phased out and the SAVE plan is already shut down. Okay? Under the new system, what we are going to be dealing with is the standard plan. Now, the standard plan is going to be a repayment plan option, and the standard plan is going to also include the repayment assistance plan. Now, your repayment assistance plan is a new plan that's coming out. So previously, we were being provided, the educational service providers were basically under the student loan education system. But now what's happening is that we are no longer able to engage in those we're not able to engage in those student loan education repayment options. We're not able to even deal with the student loan education department because what's happening is all of the debt that the student loans were previously handled by, they're now being shifted from the student loan education department or the Department of Education into the government treasury. So why is this so crucial for us to understand? It's crucial because now what this means is if we're moving from the Department of Education, and we're moving from the student loan service providers like Aid Advantage, Nelnet, Mohila. If we're moving away from all of the service providers that are being able to make some type of adjustments for us in paying back our student loan debt, what's happening now is that the government taking over and allowing student loans to only be within the United States Treasury. This means that the government now controls the education. And this means that with the government controlling the education, you have to be made aware that whatever you do on your taxes now will be impacted concerning your student loan debt. So why is this so crucial to understand? It is crucial to understand because now your income will change on how much money you have to pay back for student loan debt. And if you decided that you're not going to pay the student loan debts back, they are now going to hold you accountable with the federal government. That's right. This is a major shift in student loan debt, which means that if you were receiving a refund check in your taxes, if you were receiving any money back from your taxes whenever you do your taxes, then that means that you may possibly have your entire refund check garnished, or you might have your wages garnished if you don't take care of past due student loan debt. So now that everything is shifting from the Department of Education over to the U.S. Treasury, what this means is that we have new plans in place in order for us to pay back our student loans. I know it's crazy, but let's get into the details of what our new options are, okay? So now that we understand that the Department of Education is no longer going to be our service provider, they are no longer going to provide us loans for education. That's what that means in a nutshell. But what it does mean for us is to understand when changes happen instead of deciding that we're just going to sit around and not really pay attention to what we need to do as it relates to our student loans. All right. So number one, I just want to say, and let me just stop sharing for just a second. I just want to say that let's get into a different frame of mind as it relates to our credit and our finances. I have been saying so long for decades, and I've been in the credit and finance industry for over 3 decades. That's 30 plus years if you don't understand what I'm trying to communicate. Okay, 30 plus years I have been saying that we have to change the way that we look at credit and finances in order for us to really be on the top tier with our credit and finances. You cannot be a person who thinks from the angle of, I'm just going to get away with stuff. You can't be a type of person that is going to ignore the credit and finances. You have to get on board with getting the education you need around the finances, around your credit, and being able to at least check in every 6 months to a year. We can no longer afford to be the kind of people who decide that we are only going to do the bare minimum, which is go to work, make some money, and take the money and do things with the money that we know we're not supposed to do. We are supposed to pay our debts, y'all. We should be held accountable for the things that we have signed our names to. And even though there are circumstances around everyday life where situations are going to happen, I promise you, life is going to start lifing at some point in your life if it hasn't happened already. So that means that, yes, you are going to encounter maybe a job loss. Maybe you're going to encounter death in the family, maybe a divorce, maybe a child being born, maybe a marriage. Maybe somebody has to move in, like an elderly parent or auntie or uncle or someone. Regardless of your financial status, regardless of the relationships that you are connected to around your finances, what we have to do in order for us to accept the changes and not get left behind and have our credit and finances destroyed is we have to make sure that we are getting on board with educating ourselves with the changes. So this is why Kingdom Builders Credit Repair TV show and podcast is so important for you to listen to every single Friday from 12:30 to 1, and any other time. Even if you miss the live show, make sure you go back and watch the replay and put hashtag replay in the comments. Listen, we are not a kind of people who need to continue to ignore our finances. We no longer have the ability to just sit around and take on something in our names and decide that somebody else needs to take care of it. Okay? We got to stand up and take responsibility for what we have agreed to. So when you sign your name again to any type of credit, any type of financial obligation, put together a plan that is going to allow you to pay it back or pay it off. And if you need help with that, that's why we are here at Kingdom Builders Credit Repair. So let's get back into this lesson for today. Let's get back into this message. But I just wanted to stop and say that real quick because I think that we don't understand that we have the wrong mindset when it comes to changes. And that's why so many of us tend to get behind as it relates to our credit and finances every time. All right, here we are. We're back on the actual sheet that we are talking about. We're talking about the standard plan, and the standard plan versus the repayment assistance plan is the new plan that is really going to be pushed forward for student loans. In the repayment assistance plan, we're looking at paying back our student loan debt based on our income between 1 to 10% of our income. You see this? 1 to 10% of our income is going to have to be calculated. So if you don't know how much money you're making for the year, you're gonna need to figure that out. And guess what we do in our Financial Dominion Masterclass that is happening right now that you're still able to sign up for? We are teaching you how to break everything down. So we need to figure out what is our annual income. Can we increase our income? What are the strategies that we need to put in place so that we can actually make more money and do the right things with the money that we have? So 1 to 10% of your income, if you make $100,000, that's going to be $10,000 a year that you're going to be obligated to pay back for just the student loan debt. We're not talking about your mortgage. We're not talking about your vehicles. We are not talking about those credit cards that are maxed out. We are not talking about the personal loans that you have established. We're talking about things that you decided that you wanted to go to school to get an education for, that now you're going to have to pay back that loan because the options for you to be able to defer the loan, put it in forbearance, and delay it for years and years and years until you can get yourself together to find that perfect job or to start that perfect business is no longer going to be a timeline that you have to pay back your student loan debt. So if you are making, like I said, $100,000, $50,000, 10% per year is going to be required to repay back the student loan going forward. Now, it will have the option of having this 10%, going down to maybe $10 a month, but no longer are the opportunities for you to have to not pay a dime for your student loans. So that time period has ended. Now, after about 30 years of making the payment, not from the time that you have established the student loan itself, but the date that you have started making the payment, and 30 years from that date will be the timeline on when you will be able to have that student loan forgiven if 30 years has passed of you making a payment. So I just want to stop again for a second here and just look into your eyeballs. I want to say that how many 30 years do you actually have left? How many 30 years do you have left to pay on your student loans? So this is something that we really want to pay attention to, y'all, because when we talk about the student loan debt, we understand that now that we're going to have to start paying it back, we got to put together a plan that is going to work, and that is going to work for an extensive amount of time. We're no longer doing the short timelines. We're no longer taking forever to start paying back our loans. So we need to be sure when we go to school to get the education to improve in our information, our understanding, and our application, that we are doing it for the right purpose, and we are actually going to apply these things in our skills, gifts, and talents as it relates to the income that we're going to be making down the road. Not just to go to school and get educated and we do nothing with the education. That time has ended. So we want to get on board with what? We got to get on board with making sure that we're utilizing the certificates, the licenses, the degrees that we have, so that we can implement our income increasing, that we can take care of our responsibilities and be held accountable for what it is that we are doing. We can no longer just decide that we're going to put this on the back burner. It's not going to work. It's not going to work. So back to what I was saying regarding the actual system. The new system is for 30 years of forgiveness. After you have made payments for 30 years, then the debt of the balance of your student loans can be forgiven. There are going to be, like I just said, fewer options of flexibility. So you will not have a lot of flexibility under the repayment assistance plan or the standard plans that will be made available now that the U.S. Treasury has taken over the student loans. Payment options will be changing depending on your income. So you want to make sure, number one, that you are doing your taxes, and you want to also make sure that you understand what you're putting on your taxes and how that's going to affect the student loan debt that you have to pay back. How much money are you going to have to pay per month? As we just broke down, if you make $100,000 a year, 10% of $100,000 is $10,000. If you break that down in a monthly payment, we're talking about a minimum payment of $833.33 every single 30 days is what you are looking at paying. So when we talk about the changes in your income, some borrowers could pay longer before they are able to receive forgiveness, because it's going to be 30 years of making the payment before the forgiveness option is even available. Number two, loan forgiveness is becoming harder because the Save Forgiveness pathway is gone, because the public service loan forgiveness rules are now tightened. We are having an impact where not everybody is working and not everybody is a part of a nonprofit. Because if you didn't know that previously, if you worked for a nonprofit for 10 years, or if you were a part of the government for a certain time period, I want to say 10 years as well, then you could have your student loans forgiven. But that time has now expired. So we are no longer in the realm of being able to have our student loans forgiven after 10 years, 15, 20 years. We now have to wait for 30 years of making payments on the student loan debt and then allowing that to be forgiven, whatever that balance will be. The other thing is that now we are looking at the borrowing limitations that are being reduced. So when you borrow money for a student loan education, what happens is that previously we could pretty much have the sky at our fingertips, meaning that we could borrow as much money as we wanted to borrow. But under the new laws, a graduate student, meaning that this is a person who has completed their bachelor's degree and they're going into a master's degree. So if you are going from a bachelor's to a master's, a graduate student now can only borrow $20,500 a year, and in the lifetime of their education, they can only borrow up to $100,000 in their lifetime if they are going for their master's or above. If you're going for your professional degree, now you can only borrow up to $50,000 a year under the new laws of the student loan. And this means that over your lifetime, you cannot go over $200,000 in a lifetime of borrowing money for your professional education. So this really changes the game. Students may need private loans more than the more expensive loans. The private loans are more expensive because these are literal banks and financial institutions, credit unions, banks that are now going to offer private loans to people who want to extend their education if they don't have enough money to cover over the lifetime of their education what we just said. Professional degrees, $50,000 a year, $200,000 in a lifetime. Graduate degrees, which means you have to have completed your bachelor's degree for 4 years of an education. Then you can borrow $20,500 a year or $100,000 in your lifetime. So if that's not going to get it, if that's not going to cut it, what you have to understand is that you'll have to go to a financial institution and borrow more money. And when you go to a financial institution personally to borrow money from your bank or your credit union, it's going to be way more expensive. Or either you won't be able to go to school. You will not be able to do the things that you were previously able to do. So schools will be losing their ability to charge unlimited tuition funded by loans when it comes to the regular traditional student loan education. Because the U.S. Treasury is now handling our student loans, the Department of Education is no longer in charge, but the government is now, the U.S. Treasury is now over the student loans. So now we don't have the ability to borrow as much money for our student loan education. We need to be on board with understanding that what it is that we want to go to school for, it better be something that we really want to do and that we're really going to implement. No longer are we deciding we want to change something in the middle of our education. We just want to sit it out or go get us a job or open up a business and be able to earn a living consistently until we can make that decision of what it is that we really want to do in life. Okay? So we've got that under our belt. That's number 3, and that is a big deal. Number 4, some student loan programs are being eliminated altogether. So things like the Grad Plus loans, which is the loans for students who have, again, graduated with their bachelor's degree. They're going back to school to get their master's, or they're going to school to even get their doctorate's degree, because those are the tiers as it relates to student loans. You start out as an associate's degree, you get your bachelor's degree. Associate's is 2 years, 2 to 3 years. We have the bachelor's degree that is 3 to 4 years. Then we have your master's degree that usually is about another 3 or 4 years. And then we have our doctor's degree that is also around the 3 to 4 year timeline, depending on what you're going to school for. So anyone that has exceeded the bachelor's level, the loan programs that were previously in place for you to have your loans taken care of, for you to continue to go to school and get a deduction for not having to pay the loans back while you're in school, etc., etc. All of those are being either reduced or eliminated. When I say reduced, it's only a handful of people that will be able to get the Grad Plus loan, and the amount of the loan will no longer be unlimited. They will not be able to give you the option to just get the Grad loan plus, or the Grad Plus loan, as much money as you were previously able to receive. So it's less federal funding, it's less access, it's more financial pressure on students to be able to come up with their own money for an education. Let's talk about the income-driven payment plans. And I may have to do a part 2 because we're already at time. Income-driven repayment plans are being phased out by 2028. Most of your current plans will be eliminated completely probably within within the next year or so, because we're only 2 years away from 2028. We're already in 2026. So it's going to be just a hop, skip, and a jump, and we're already going to be in 2028. So by 2028, all income-driven payment plans are going to be completely phased out. And the impact is going to be that everyone eventually has to move to an RAP or a standard plan. So what this means is that there's less forgiveness, there's more restrictions around the repayment rules. So you won't be able to just make adjustments how you want it. You won't be able to say, okay, well, put it in deferment, put it in forbearance. Let's just see if I can extend this for another 6 months so that I don't have to pay on the debt while I'm going to school. Those are the kinds of things that are going away. Those are the kinds of things that are no longer going to be made available for us as it relates to student loans. So if we are not out here making the money to go and get an education or to take care of the education for our children or grandchildren, listen, it's not going to be available. It's not going to be that easy for us. Also, as it relates to our student loans, for those of us who have student loans that are already in default currently, what this means is that your student loans are no longer protected by the previous plans that they were under, which means that now the student loans are going to go into charge off after you have not paid on the student loan debt for 6 months. And after it goes into charge off, then the student loan debt is going to go to collections, and the collections process is going to be way more aggressive as it relates to you being able to get out of not paying your student loans. So it won't be where you just go to collections like you normally would any other type of debt. Now, because the Department of Education no longer handles the student loans, but the U.S. Treasury handles the student loans, now you will have your wages garnished if you do not pay the student loan debt back after a certain period of time. So it's going to be way more aggressive. Fewer plan options, possible lower payments for low income under the repayment assistance plan. However, it's still going to be more stricter, and it's going to be a simpler, more black and white type of plan. Okay, it's going to be more direct and just simplified, but it is going to be a lot more stricter. So the high risk zones for people that are in default already, or that are in a situation where they are about to go into default, what I would advise for you to do is to check in with the student loans that you currently have. There probably will be some confusion with the Department of Education or whoever holds your student loans as a service provider right now or previously to now. Because everything is now transitioning over to the U.S. Treasury to handle the student loans, you may call and try to gain information about it, and it may be conflicting information because we're all learning the new system around student loan debt. So if you don't want your wages garnished, if you don't want your tax refund seized, and if you don't want your credit damaged to the degree that you possibly won't be able to do anything to reverse it unless you come to KBCR, then you want to make sure that you handle this student loan issue. I'm going to go ahead and do a part 2, but real quick, the bottom line for future students is that it's going to be harder for you to borrow large amounts of money. The reliance on private loans are going to start to be implemented. So you're going to have a good credit score in order for you to be able to get a private loan. Parents, if you are trying to send your child to college, you need to make sure that you get into Kingdom Builders Credit Repair now, because if you don't, then and your credit is not good, then it's going to be a problem for you in the future. And also, it's going to be less government flexibility. So when we talk about less government flexibility. We're talking about your ability to not be able to just do what you were previously able to do regarding your student loan debt. You're not going to have that flexibility with the government. The government is going to be running a tight ship. They are going to be running a very strict deal as it relates to education going forward. So I want you to take this serious. I want you to understand. Stop worrying about everything that's going on around you, and let's really begin to focus on how are we going to plan to get ourselves out of this student loan debt. Because I know we all want that education. We all have things that we have decided that, hey, I'm going to change my career in the middle of like 10 years of being in a certain field or whatnot, and that's absolutely fine. And in case you didn't know, I also own Kingdom Builders Business University, which teaches you how to strategize for the passion, the gift, the skill that you do have, and making sure that you are aligned with that so we can help you in both business as well as in personal finances and in credit. That is my specialty. Those are the three areas of Michelle Green, aka KB.MichelleGreen, Kingdom Builders Michelle Green. That is our specialty here. For all of the businesses that we own, all of the businesses that we have, we specialize in personal finance, credit, and business. So if you are one of those people that are thinking like, I might need to call Michelle Green so that I can get into one of her business courses and she can help me to rearrange my career for going into something that I really love instead of just doing what I'm doing to earn a living right now. Well, you need to go and run to www.kbbullc.com. Go to that website and get into our associate certification classes right now that are going on for 6 months at a time. So every 6 months, by the time you graduate, you'll already have your certification. You'll be able to have the education that you need around business so that you can excel as a business owner. If you are dealing with your personal finances, get into the Kingdom Builders Credit Repair Program so that you can obtain a better credit score that ranges between 650 to 850. If you want a further education in finances, get into our Financial Dominion Masterclass. We have the official Financial Dominion Masterclass that is going on. And when I say every student in there is having a ball, they are learning things that they never even considered before. And when I say that they are coming out of that class with a certification in finances from Kingdom Builders Credit Repair, we are hosting this masterclass to teach you all about basic finances. We have so many people that combine their finances with their credit every day, and that is not the way that we are supposed to deal with our money. So what we do in our Financial Dominion Masterclass is break down all of your finances. If you're having problems with going to eat out, if you're having problems with shopping, if you're having problems with taxes or insurance or even investing money, if you don't know how to set up a trust fund or a will, those are all things that we cover in the Financial Dominion Masterclass, the official Financial Dominion Masterclass. So listen, we have solutions for you, but it's up to you to take advantage of these solutions. We want to help you. We want your credit scores to soar above 750, 850. We want you to get to that highest level and be able to maintain and manage it. Our credit services are for 1 full year, so you're going to be well taken care of. It's not like we're going to hold your hand for a little bit and then drop it as soon as your bill is paid. That's not how we do here. Listen, we want you to have all the education that you possibly can have. So that's why it's so important as it relates to our topic today, student loans, and as it relates to our entire life. We got to understand that we're always going to need information, education. We're always going to need understanding and be able to apply the information that we receive and the understanding so that we can implement our income going to a higher tier so that we can have a better lifestyle. We don't want to be burdened down with all of these obligations of going to pay for $1,000 a month for an education, and we can't even put food on the table, or we can't even keep our lights and water on. We want to be able to have the vehicle to drive to get back and forth to work and do the things that we need to do. So why is it so crucial for you to get in now? Because you want to make sure that you are prepared for your future. That's why it's so important for you to get into something as it relates to Kingdom Builders and KB.MichelleGreen. Michelle Green everywhere. Listen, we need to get into Kingdom Builders Credit Repair. We need to get into that Financial Dominion Masterclass, or we need to get into Kingdom Builders Business University. You got to do something, because if you wait, if you delay any longer, it's just going to get worse. I promise you that. It's just going to get worse, because there isn't a lot of people out here that really want you to succeed in the first place. So you got to understand that if you don't act now, if you don't act immediately and make sure you're prepared for what's coming down the road and what has already been established, then that is an indication for failure. It's an indication for failure, and I don't want you to fail. So listen, go to kbbullc.com if you want business help. Go to kingdombuilderscreditrepair.com if you want personal credit or financial help. We can help you in any way possible. And we want to thank you for the extended time that you have stayed with us to watch this video today. And please make sure that you share this with a family member, a friend. And listen, next week we can even talk about this a little bit further of student loan debt, the reset for 2026, and what changes are coming down the pipeline that we need to be prepared for. But again, thank you for watching, and we'll see you next time. Bye-bye.